may seem hard to believe, but 2011 is just over a month away, and it may be time to jump back into the stock market. So says Manisha Thakor. She's a personal finance expert and the co-author of the book Own My Own 2 Feet. She joins us from Houston. Good to see you.
Hi, Frederica.
All right, well, let's begin with your first tip, and you say it's time to start thinking about stocks again. Go ahead and indulge in those stocks.
Absolutely. So, Frederica, I think stocks are an essential part of a healthy financial diet. They provide growth, they help offset inflation, but many people are stock deficient in their portfolios right now because they got scared off over the last couple of years. So a great rule of thumb to use is John Bogle's 100 minus your age is a rough rule of thumb for what % of your portfolio should be in stocks. If you're a man, if you're a woman, because we live longer, I like to use the equation 110 minus your age for the % of your portfolio to be in stocks.
Well, that's very encouraging because a lot of times people are thinking 50-50, but definitely no more than that for stocks. And you say go ahead and indulge depending on your age. Okay. All right, let's move on to the next. You say next, go big. What do you mean by that?
So this is interesting, Frederick. At the early stages of an economic recovery, typically it's small and mid-cap companies that do the best. Then you move into the really unglamorous part, which is where we are right now, just kind of grinding it out for a couple of years until things settle. But in this kind of environment, oftentimes it's the big companies that do the best for 3 reasons. Their balance sheets are cleaned up. We know that because we can see how many people they've laid off. So any uptick in revenues drops to the bottom line. They have lots of exposure overseas, and my favorite reason, Frederica, they pay dividends. So you get a little bit of cash in hand up front while you're waiting for the underlying stock to appreciate.
Okay, and of course you're looking at the big companies mostly domestically, but you say, you know what, go ahead and stretch out, start venturing overseas. To what extent?
Absolutely. It's that old adage, why do you rob a bank? Because that's where the money is. Why go overseas? That's where the growth is. And to put some numbers around that, there are 6.8 billion of us on the planet. Only 310 million of us live in the U.S. There are about 4 billion people right now bumping up against the threshold, entering into a place economically where they have enough disposable income to start spending on discretionary items. So the companies, particularly in India, China, Brazil, that are serving that marketplace, that growing middle class, that's a great place to be looking to invest in 2011.
Okay, and then you say stay short. What do you mean by that?
So this is interesting. We've been talking about stocks up until now, but part of a healthy portfolio also would include bonds or fixed income. And the Fed has been performing financial CPR on the economy, keeping interest rates very low. And that affects bonds because when interest rates go up, bond prices go down. So if you think about bonds as a seesaw, since rates are so low, there's only one way to go up. You want to be on the shortest seesaw possible so you don't get whipsawed. So you want to own bonds that mature, that have a duration kind of 1 to 3 years out in this kind of environment.
Okay, and overall, just be calculated with your risk.
Absolutely. A lot of people, especially baby boomers, are looking at their portfolios. The number is much smaller than they wanted, and there's this voice in their head that says, why don't I just go for the big home run? And my point is, the math of losing money is painful. If you invest in a can't-miss investment that misses and goes down 50%, you now have to earn 100% just to break even. So if you've got that itch to take a big risk, be calculated. I recommend keeping it to 5% or less of your portfolio.
All right, already thinking about the new year. Thanks so much. Before we even get to Happy Thanksgiving, but Happy Thanksgiving since I won't see you before then. Manisha Thakor.
Happy Thanksgiving,
Thanks
Frederica.
so much from Houston. Appreciate it.